Hello, chart watchers, and welcome to this Thursday, March 8th, Market Watchers live show with your host, Tom Bowley and Erin Swinlin. If you are just joining us for the first time today, welcome to the show. We're certainly glad that you're with us. And for our regulars, welcome back. The market trying to extend the gains that it saw yesterday, at least the rally that we saw yesterday. You can see that the Dow Jones Industrial Average right now down 2 points. It was up, just went negative. The S&P 500 hanging on by a thread to the upside, up about 3.5 points. The NASDAQ doing much better on a relative basis, trying to break back up above that reaction high that we saw at the end of February, trading up 24 points this morning. The Russell 2000 has been the strongest of them all lately on a relative basis, but it is down today nearly 4 points. 10-year Treasury yield down 3 basis points back to 285 as it continues to consolidate in this 15 basis point range between 280 and 295. Volatility index earlier today was down at 15, has come back up. I think this is a really big level on the volatility. Last two bear markets never saw a volatility reading below 16. So this is an important area of support that we need to watch. The gambling index performing very well today, as you can see, breaking out above recent highs. A couple of companies in that space reported earnings this morning. I'll talk about that in a bit. One of those, though, is International Game Technology, and this is one of the best performing stocks within the gambling space. You can see a huge move up, a lot of indecision here with very heavy volume, but this would be a significant breakout if we see strength into the close. Recreational products struggling. Look at the multiple tops here at about 395, 396. We got up just above that earlier today, and looks like at this point anyway, a false breakout to the upside as we have reversed significantly there. Healthcare doing very well on a relative basis today, and one of the reasons, Cigna made an announcement that they would be acquiring Express Scripts. I think the deal is about $54 billion. Cigna down significantly on the news as the acquirer. Obviously, traders thinking that maybe this is not going to be accretive to earnings. And ESRX, however, you can see had a huge gap up at the beginning of the day, has traded off of it, but still is up roughly about 10% on the trading day. And with that, let me bring in my co-host, Erin. How are you doing this morning, Erin? We're not getting your sound.
All right. Do you hear me now?
There you go. How are you doing?
Yeah, I muted. I was starting to echo a little bit. Yeah, I'm really excited, actually, because we're going to do Anatomy of a Trade later. And I actually have 2 trades. Actual trades to talk about. Everybody who's not familiar or new to the show, I'm more of an intermediate term trader. So when we do an anatomy of a trade, I'm usually showing a paper trade. And Tom, you're so short term. We always see, I don't know, how many symbols from you usually on that?
I don't know. There are usually a few. I'll have a few today for sure. I think our special guest, Tushar Chande, who's here today. First of all, welcome to the show, Tushar. How are you doing?
Oh, very good. Good morning, everybody. Good morning, Tom and Erin. Thank you for having me back on the show. And yeah, I have a trait to share as well. I mean, maybe not as glamorous as yours, but nonetheless, one of those, live and learn kind of stories. Fun nonetheless.
Well, there's only one way to define glamorous trade, in my opinion. That's as if you make money.
Yes.
Yes. Well, this was a glamorous trade then, but it could have been more glamorous.
Yeah.
If you're making money, they're glamorous. That's the way I look at it. But we're going to get back to you here in about 10 or 15 minutes. We are very happy, though, that you're joining us today, Tushar. Okay, well, Erin, I know we got a bunch to get into, another busy day ahead. So I'm going to let you go through the announcements and the agenda with everyone, and we'll get started.
Absolutely. So for the schedule, we have Tom's workshop tomorrow. Everybody voted and decided that they wanted him to talk about establishing a strong earnings chart list. So you'll definitely want to join Tom tomorrow for that workshop. And today, yes, jam-packed as always. Tushar Chande is here, and we will have him do a nice long segment. We'll follow that with the 10 and 10 to 1, and our first symbol is going to be Verizon, VZ. So you can go check that out. And finally, like I said, we're going to be doing an anatomy of a trade and giving you a few of the tips and the good, the bad, and the ugly. So we'll get started right now. I'm going to pass it back to you, Tom, for some technical news.
Sounds good. All right, let's start off with that 10-year Treasury yield. You can see it's down today, but once again, consolidating in this range that we've been talking about for quite some time. Again, this doesn't surprise me. You can see that PPO now on the TNX making its way, winding back down. It had gotten way stretched back as we began February after the huge move up in Treasury yields. So I kind of find this to be somewhat bullish for yields, meaning I think eventually we're going to go higher, but we are consolidating the gains that we saw in the yield for quite some time. And when the yield's moving down, that simply means money is rotating a little bit back into the bond market. I don't think that's going to last, but we shall see. If I'm wrong about this being a bull market and or a continuing bull market, then we could see a lot more money move back into bonds and we could see the yield break down. But I just don't see that happening. But and I know Tushar will be talking about that later as well. But let's get into some of the news for today. First, Cigna did come out with that announcement today that they are going to spend $54 billion in stock and cash. I think the cash part of it was about $48.75, and the balance was in stock. You can see the traders not overly impressed. The move to the downside here, not really a particularly good one if you are long Cigna. We had a bear flag in play, down move, sideways consolidation. This always bothers me when we've gotten such a nice bounce on the S&P 500 and especially on the NASDAQ. To see, Cigna hardly bounce at all, not being able to get back through its 20-day moving average. This tells you that there's a lot of relative weakness in the stock. And so I'm not shocked to see the volume coming into the stock on this move to the downside as Cigna prepares to make a major acquisition of Express Scripts. Now, ESRX, on the other hand, even though it's well off the highs, you can see it is still up almost 10% on the day. Huge gap up. I don't like this candle today. And after today, it'll probably trade along with Cigna going forward until the deal closes. So my guess is we're going to see this continue to trickle down, probably more weakness out of Cigna as well. But the one thing this does do is it does provide some interest in the group. Anytime you get big deals like this and you get premiums being paid for companies like Express Scripts, that can then lead to jumps in other stocks in the space. So they move up in sympathy, which is a great thing if you're in the space. And earlier, I know that the XLV was performing, was at the top of the sector leaderboard. I don't know if it still is, being off the high of the day. I'm not sure if it's still there or not, but it is up 0.5%. It's certainly outperforming the overall market today. And the Cigna Express Scripts deal was part of the reason. Now, earlier this morning, there was a report out, news out, that JP Morgan co-president Daniel Pinto said that we could see a 40% correction sometime over the next few years. Now, I just kind of read this, and first of all, for me, I just tossed it off to the side because it's like anyone else's opinion. It's just an opinion. But, when I think about it, first of all, he's a co-president of a bank, a financial institution. They do a lot of trading. So, certainly he's in the business, but I wouldn't consider him an analyst. So it always makes me wonder, it's like me trying to tell you what's going to happen with global warming. That's not really my forte, and I don't think that I would suggest anyone listen to me. But I don't know. I guess it makes headlines when somebody comes out, especially someone with a big bank, to come out and say we could see a 40% correction over the next few years. Well, guess what? A lot of bear markets, we do see 40% corrections. At some point, we will get a bear market. So I'm going to say a great call. I'm not sure when it's going to happen, but yeah, it'll probably happen sometime. Just had to mention that. Dollar today strengthening, the UUP. And I think this is an interesting chart to watch for a number of reasons. And we've talked about the dollar and many of the implications that the dollar has in various asset groups. And I was getting a little concerned because after moving up and getting that 50-day test, which I did expect, we had equal lows. You can see that the PPO is much higher. Normally what that means is that the 20-day moving average, which is declining and typically provides a pretty formidable resistance. When you get the positive divergence, that's when I start looking for the 50-day test. And here we got it, bearish engulfing candle. We pulled back. I was looking for maybe a 20-day test and then a move back up. And here you can see we actually went below the 20-day twice. We had gapped down, traded sideways here for a couple of days. Now we gap back up and moving back above that 20-day moving average. I think that this is a critical zone on the dollar. I think the recent high at about 23.80, 23.75 to 23.80, and then the downside around 23.10, 23.15. I think this is a Very important area to see which way the dollar breaks out of this. And I could go back into my long-term charts, but suffice it to say that if the dollar breaks back up to the upside and we can get a golden cross with that 20-day coming back up above the 50, that's going to have some major implications in the market as we go through 2018. 2017, we had a declining dollar most of the year, and that was really a tailwind for S&P 500 stocks relative to, say, the Russell 2000. I think that could flip in 2018, and we could see a lot more strength, relative strength, in the Russell 2000 if the dollar were to break out and start strengthening. And so let me pull up first and bring up this Russell 2000 SPX, because off of this bottom here in February on the dollar, I want you to take a look at what's been going on between these two indices. Oops, I didn't want to annotate. Let's just go ahead and update this, and I do want to make it a line chart. Usually when I use relative ratios, I think they're much clearer using a line chart. But here was that bottom that I talked about, the end of January. Went back down, put in a double bottom, and look at what is going on here in the early part of March. Russell 2000 is really starting to rock and roll versus the S&P 500. And I'm not going to spend a lot of time on it, but I do want to go back and just show you one chart that I'm watching very frequently, and that is this yield, which continues to move up here in the U.S. relative to Germany. The dollar usually moves up with it, but it's been going down. And the last two times we've seen this divergence, back in 2009 and again in 2013, 2014, where yields were going up relative to Germany, but the dollar was going down, we had massive rallies in the dollar to follow. And here we are at a major support level on the dollar, potentially ready to rally again. And I think short term, if we can take out that recent high, it could trigger a much bigger rise in the dollar. Now, what does that mean? Well, check out the last two times this happened with the dollar making a big move to the upside. The Russell 2000 completely outperformed the S&P 500 during this big move up in the dollar, because again, as the dollar's rising, it's impacting negatively the earnings on the S&P 500 companies. Those companies are multinationals. They do a lot of business overseas. And when you translate gains or losses based on the currencies, you end up losing profits on the S&P 500 during a rising dollar. Now, I'm not saying it's happening, but you can see off of major relative support, the Russell 2000 is starting to move to the upside. So that's why I think it's important that we watch the dollar here going forward. A couple of groups making a little noise today. First, let's talk about the gambling stocks, DJUSCA. I think this is an important breakout here. We had an uptrend in play. I think the uptrend is held. We did hold on to the recent lows with that hammer. We bounced back, pulled back, put in a double bottom, and now we're breaking back out to the upside. I think this is a move that could be sustained to the upside. The 20-day moving average getting ready to make a golden cross over that 50-day. And one of the reasons why is International Game Technology, IGT. This morning they came out, or maybe it was last night, but I think it was this morning. International Game Technology revenues, $1.35 billion. Market was only expecting $1.25 billion, so a beat on the top line, and they blew away their bottom line, 68 cents versus 39. And here we are on the verge of a breakout. It would be very bullish with this kind of volume picking up for us to close above that prior high. You can see the PPO just crossing above the center line, pointing up, so bullish momentum, price momentum picking up. And we got great volume, so breakout should be respected here. IGT doing very well. The toy index, another area within the consumer discretionary space, on the verge of a breakout. Gap up, we pulled back. We've been making our way all the way back up, and we are at resistance. Now, I would not be jumping in here. I'd want to see the breakout, but just wanted to point out that toys have been strengthening and getting close to a breakout. In my blog this morning, I mentioned the specialized consumer services. You can see the breakout here. This is a nice uptrend, a cup, a handle, and a breakout. This measures up to almost 1,600 on the specialized consumer services index. And some of the stocks that I mentioned in my article this morning, MTCH, this is Match Group Inc. Beautiful move up here. I'd like to see a little bit more volume on this move. You got a negative divergence with a breakout on suspect volume. So this is probably one I'd be a little careful of. I think there's a little bit too much risk in this one, but there are others that do look good. We've got Meli, which is Mercado Libre. A nice move up here, pulling back, but I think that rising 20-day moving average starting to provide great support. I know one that Erin had talked about quite a bit, Etsy. I think this may have been one of her setups a few weeks back. Beautiful earnings report, gap up. I think this is one that looks really good, although I don't like today's candle if it finishes like that. But on a pullback, Etsy, I think, looks interesting. Copart, CPRT, big gap up with earnings, came back down, tested the rising 20-day moving average. Now it's back up near resistance. I think this one sideways consolidating before a breakout. And probably the one that you may know the best, eBay. eBay had a huge earnings report, gapped up, went all the way back down, filled the gap, and is making its move back up. I think this one's heading back to that 46, 47 area to test the recent breakout. With that, I'm going to turn it over to Erin for some upgrades and some downgrades, and then we'll bring Tushar in.
All right, let's do this. Look at my screen. So we look up, well, Tom looks up. I'm going to give you the credit here. Looks up upgrades and downgrades, and the ones that look particularly interesting, he passes along to me so that we can look at them. I'm going to just go through them very quickly, but here is the summary of what we're looking at. I'm going to start with the downgrades and see what's going on. I didn't see any charts that were particularly great, I guess is the word I'm going to use. There were a lot of different things in here that I didn't like. So anyway, we're looking at CF Industries. This was a downgrade, and you can see that double top is right there. Today, we just activated that pattern and confirmed it, and you should expect a drop about the size of that pattern. Interestingly, that would bring you right about down here where we had the low from last month. So downgraded, and I don't think there's any opportunity to get in on this with this pullback. I don't like it. This one I thought was somewhat interesting. I saw the one thing that popped out for me was this. It's really complex Head and Shoulders, but those are for real. You can set those up, and I do see that with this sloping neckline. So at this point, it would have to come down here and test that support and the neckline actually as it goes, and we'll see if that can hold up. I don't like the fact that we've got a PMO that is topped, but you can see though it has been, the PMO tops have been rising right here, and the price tops have been moving lower, and that's actually a positive divergence. So I think what we need to do is watch that area around 750 and see if we might have an opportunity there. But this pattern does have me a bit concerned. Upgrades, technology, and semis have been doing fantastic. Not a surprise to see a great chart here for microchip technology. Nice PMO buy signal. It's now in the positive zone. You know, it's already had a really big run here, but I don't think that, you know, that it's over. I think we definitely have more to go. And that's because I see this 20, 50-day positive crossover. So that gives me an intermediate term trend model buy as far as our decision point trend models. And I would be watching that 98 level, obviously, but how nice that we did get that nice bar here and set a new intraday high up here, but we pulled all the way back down to that 94 level, 94.75 right now. And I think that gives you some opportunity. So I thought that one looked pretty good. Parker Hannifin. This one I think has some potential, but I didn't like the negative divergence between the PMO and the price bottoms. But I think you could make a case for a possible double bottom, forming here after this big decline. And actually, if you look here, the bottom, the actual close over here for these two bars is up in this area. So at this point, there's that area of support. We're sitting on top of it right there. I would look for a move up to test that 185, 190 area possibly. And with that double bottom, if we see that breakout over the neckline, that'd be fantastic. Wendy's very quickly, and then I will move things over to Tushar. Really nice breakout on Wendy's. I saw this symmetrical triangle, and that's typically a continuation pattern. Well, we've been in an upswing here since November, and now we got that breakout from that declining tops trend line. So I think that looks pretty good. We're right now getting ready to test that high back here from January. But looking at this at the setups here. I mean, the OBV looks nice, and the scooters are now in the hot zone. So I think we could certainly punch up above that overhead resistance on Wendy's. And finally, Whiting Petroleum. Short term, not liking it. Double top here, just looking at, well, you can see. Here we go. Let's get back over here. All righty. Okay, so you can see that double top in the short term. If we do get the activation, it would be a drop below that 20-day EMA, that 50-day EMA, and the 200. So if I saw that drop there below that neckline, I would certainly expect it to move further down into that 24 area. And with that, there's the top on the PMO. So that's it for upgrades, downgrades.
Yeah, I thought looking at those, I did think Wendy's was kind of interesting because it is trying to make a breakout, and it's in that restaurant and bar area that's been so weak relative to the S&P 500. So
yeah,
at least one thing that Wendy's has going for it is that it's a very, very strong relative performer in a group that's not performing so well. So if that group actually turns up and you get a breakout on Wendy's, that could be a great trade.
Yeah, absolutely. I think it's definitely promising right here. So, all right.
All right, well, I think we've got our guest, Tushar, coming in. I tell you what, Tushar, I hate putting you on the spot, but over the last month, we've had a lot of changes since you've been on the show, and the market's been all over the place. I'm kind of interested to see what you have to say about things.
Well, I think let me start by saying that Wendy's has given us some food for thought.
There we go.
There we are. Oh, by the way, before you get started, Tushar, we are running a poll right now that Tushar actually suggested, and you can find that, you know, the chat box to your right, but if there's a polls tab, go on to that polls tab and tell us whether you think we're getting ready to have a double bottom. And then we'll check what everybody thinks after your presentation, Tushar.
Yeah, thanks for putting me on the spot, Erin.
Of course.
Erin is convinced that I can't change any mind, so you guys have to help me out there. Let me say that I want to thank Tom for giving me the ideas for my presentation today. And essentially, he wanted me to talk about you know, how do we deal with volatile markets. The correction, is it a correction or a bear market? Is a dollar basing or debasing? So I'll cover those things. And then I brought along a new indicator that I'd like to talk about. So hopefully we can get through all of this. Feel free to pop in and ask questions, you know, as you wish. So first one, how do you deal with high volatile markets or high volatility markets? You have two basic options. You can either lengthen your time frame and just absorb the volatility and buy the dips or sell the rallies, or you can shorten your time frame and maybe use intraday data or trade patterns. The third option is use what I call dynamic or self-adjusting indicators, like the variable index average that I built in the 90s. And it does option 2 for you. That is, it automatically shortens or lengthens your time frame. And just to give you an example, I have a chart of the Dow index on a 10-minute chart. So suppose you wanted to shrink your time period in order to deal with the volatility, you can see that you could certainly get some very nice swing moves off the Dow. And I have on the lower panel, I have the stochastic RSI. So you can, when it's in green or above 0.7, above 0.8 and below 0.2, then you know that it's confirming the trend. So this is an example of doing, quote, trend following on a 10-minute horizon. But it allows you to use your same trend following ideas and tools and confirmations, but you can deal with volatility by shrinking your time frame. So that's an example of what I was talking about. This is the hot topic for the day. Are we in a correction? Are we in a bear market? And Tom referred to, you know, famous Wall Street guy making a, you know, ambiguous projection about some point in the future. Of course, I can never be wrong that way. So my view is I'm only looking at 2018. I'm not really looking at 19 or 20. And in my opinion, a bear market, which gives you like a 40% drawdown, needs a weak macroeconomy. You need rising unemployment, very weak GDP, weak new car sales, weak housing sales, and so on and so forth. And so far, our 2018 data are strong, and it doesn't look like they're going to drop off anytime soon, at least not this year. So for 2018, I'm in the correction camp. And I'll show you some data to support my view. And I have something called macro indicators. So I take some macroeconomic data and crunch them down into a more convenient scale. You can look at my website. So the macroeconomy is strong. So at least for 2018, I'm on the side of the correction rather than a bear market. Here's some technical data to support my view. So these are, again, dials from my website. I've only looked at all the stocks in the S&P 500, and the two left-hand dials are the strategic allocation and the tactical allocation. So if you look at the long-term view, which is the strategic allocation, it's green. It's showing only 23% cash. And as long as the percentage cash on this dial is less than, or rather greater than 45%, sorry, let me say it again. As long as the cash is less than 45%, we're in a bull market. So if you look at the lower dial, which is a medium-term view, we're in 60% cash. So clearly, we're having a short-term pullback within a long-term uptrend. So again, which tells me that I'm on the correction side rather than a bear market side. And because we are in a correction, then my long-term year-ahead forecast is, say, up 17% with some error band, just using some basic sort of projection tools. Now, the basic problem we have right now is that we have a divergence between market internals and market indexes, and that typically happens during a pullback. So what I'm showing here is the key ETF groups, and I'm applying an intermediate term trend following models, and I'm asking what percentage of these ETFs are bullish or bearish, that they're trending up versus trending down. And all that matters is you can see that in I've just divided into a green box and a red box. And you see that in early 2016, we were deep in the red box. Then around the election time, we also entered the red box. In 2017, we had a few little dips in, but nothing major. And now we're dipping back into the red box again. So what this is telling me is that on an intermediate basis, many of the key ETFs I'm looking at are trending lower. So it's kind of a warning sign. Of course, it could just be a small dip, but it's something to look for, and which will tie in with something I'll show you a little bit later. One more slide I want to show you is we have weak market breadth. And what I mean by that is I applied my trend following models, short-term, medium-term, intermediate-term, and long-term, to 4 groups. So I looked at the S&P, the small cap 600, the mid cap 400, the large cap 500 or the S&P 500, and the mega cap 135. And in every group, the path of least resistance is lower on the short, medium, and intermediate time frame, and it's all up on the long-term time frame, which kind of confirms what I showed you a couple of slides ago, that we're having an intermediate-term pullback within a long-term uptrend. So we have to be a little bit careful here in the sense that the market is still vulnerable to shocks because we have weak breadth. And eventually, of course, the breadth and the price will be in sync. But for now, we have a little bit of a disconnect between the two. And finally, I just want to show you this chart of what I did was I looked at the Vanguard capital weighted ETFs. So they have mega cap ETFs and mid cap and large cap and small cap ETFs. And in each one, they have blend, growth, and value. And I applied my trend following models, short, medium, intermediate term, and long term. And if you look at this chart on the right-hand side, on the long-term column, everything is green. So the long-term trend is up across the board, value or growth, and for every capital market cap sector. But on the other 3 time frames, it's mixed. Particularly, the value funds are still trending lower on the medium term, and the rest are flat. And the growth guys are trending up a little bit on the intermediate term, and the small caps are rebounded a bit on the short term. So again, we're getting this confirmation of this mixed picture, whether you look at it as capital groups, Vanguard funds, or just indexes, where long-term trend is up, short-term trend and intermediate-term trend is mixed. So I think the market is still sort of recovering from the February sell-off. And if you look at the history of these market corrections, they take about 60 days to sort out, and we've so 60 trading days, and we've only maybe been there for about 20, 25, 30 days. So I think that the market is still sorting itself out. And of course, the Nasdaq has come up to old highs, but the Dow and the S&P are still below the old highs, which leads us to our poll question. Is there a dominant market pattern? Is there a pattern that's evolving and emerging? And the question here is a double bottom pattern developing? And if you read the blogs, Tom himself has suggested that, John Murphy suggested that, I've written about it a few times. So I just wanted to show you, and I have a blog, so I'll just show you one chart out of the blog, and you can you can read the rest, look at the rest of the charts at your convenience. So this is the 2016 February bottom, and this is typical of the pattern or the template. The market comes down, forms a low, then rebounds into the Fibonacci retracement zone somewhere between 38% and 62%, maybe a little bit higher, and then trickles down and retests the low, and then we get the significant rebound. Now, important thing to note is that the Chande trend meter, which is an absolute trend strength measure, was below 20 during the entire sell-off, or during the formation of the low. So that's something to keep an eye for. So that's the template, and where are we now? So where we are now is, you can see the 2018 pattern, we've formed the low, we rebounded a little bit above the Fibonacci zone, then we came back down, and we're trickling lower. And the question is, which is today's poll question, are we going to form a double bottom? Now, again, I want to point out that the market internals are still weak, but the trend meter here has not trickled below 20. So the market is still reasonably strong on a price basis, though it seems to be weakening on sort of a market internals basis when you look at individual stocks. So that's the poll question, and I'd love to hear what you have to say. And sorry, go ahead, Tom, do you have a question?
Yeah, actually, I was just going to say, you mentioned that the S&P 500 has bounced back, but the NASDAQ has bounced back more. Correct. Do you find that that is more of a bullish confirmation signal that you've got money rotating back into the more aggressive names on the NASDAQ more so than the S&P? Because if in a bear market, and of course, I go back and all you can do is look at history, sure, try to, make some sense out, sure, of the market action. Sure. But in prior bear markets, or just before prior bear markets, as the S&P 500 is topping, we see money come out of those aggressive areas and into more defensive areas. And I'm really, I'm not seeing this even over the last couple of weeks. And I mentioned this in my blog this morning. When you look back over the last couple of weeks, there's been a lot of volatility, a lot of big back and forth action, but there's only one sector that has gone up or down more than 1% in the last week, for instance, and that one sector is technology, which has actually gone up more than 1%. So I'm just not seeing the mass exodus or repositioning that you would typically see heading into a bear market. So I was just wondering if you had any thoughts about that, the fact that the NASDAQ is leading, and even more recently, we're starting to see some leadership from small caps. What do you think?
Right. So again, we talked about correction versus bear market. This is clearly not a bear market. It's more of a correction. The recovery in the recovery in the NASDAQ has primarily been driven by mega cap stocks and semiconductor stocks. So the breadth is somewhat narrow, but hey, it's approaching highs. You can't ignore that. So I think that the market, if I take a step back, in 2015, when we had this ETF, the canaries in the red area, the market was vulnerable to a price shock, and we had the big sell-off in August. So I think that the market remains vulnerable, and the strength in the NASDAQ, which cannot be ignored, is maybe masking some of the underlying weakness. And I think the solution for that is just time. I think the market just needs some time to absorb the selling that came in February, and kind of it's like a tuning fork. You slam the tuning fork. Now it takes a little while for all the vibrations to damp out. So I think what we are seeing is that the vibrations are being damped out. And of course, the inflow or the price recovery in the NASDAQ is clearly a sign that the market wants to go higher. And also, if you look at the VIX index, it slammed up, or it rocketed up to 50, came back down, went below 17.5, and came back up again, but didn't really come back. It didn't go back up with any great velocity or conviction. So I think that if I just use my next chart here, the fact that we are having a triangular, or say a symmetrical triangle consolidation in the Dow still becomes the dominant pattern for the broader market, and we should expect a breakout from this pattern. And of course, if it goes higher, I'd love it. But I think that because we have all these divergences internally, where say the intermediate term time frame, most of the stocks are still reeling from the sell-off, I think the market is vulnerable to a downside downdraft. So I think that the probability of a double bottom has not been eliminated. But I think that it'll gradually, the probability of a double bottom will gradually recede if more time passes without making the bottom, because like a tuning fork, you want to damp out the vibrations. And secondly, if we can break out of this sort of symmetrical triangle consolidation to the upside. Now, clearly, there's always a possibility of a false breakout, et cetera, et cetera. But I think that I agree with you that the market has been remarkably resilient in the second leg down. That is, I thought that the second leg down would take us, further lower than it did. But I'm still a little concerned with the fact that we have all these charts I showed you where the intermediate term picture on the broader market is still quite weak. So I think we need a little time to kind of, heal all wounds, if you will.
Yeah. I guess this is an obvious question for folks that are sitting there, with cash in hand. But would you use this consolidation period? I mean, you said that you're more in the correction mode rather than bear market based on everything you can see at this point. Of course, no one knows what's going to happen down the road. All you can do is go based on the clues that you have right now. Okay. But if you were, someone watching the show here who's got cash in hand, based on your correction theory, would you be buying certain stocks at this point? And if so, where would you think about looking?
Great question. Yes, I would buy. And for that, I need to jump ahead. If it's okay, I'll jump ahead with you, and I won't worry about it too much. Let me just jump ahead, and okay. I can answer your question more specifically.
Okay.
What I'll do is, so if you think to answer your question, I need to, if I can plot things on two axes. The first axis, horizontal axis, how does the chart look? And the vertical axis, how does the performance look? So I'd like to combine these somehow and find a mathematical algorithm to plot these, and then I can answer your question. So I've done that. And what I've done is I've developed something called the relative performance meter, because I'm a little, I have some preferences why I want to do this way. But what I do is I directly compare the multi-period performance to the selected index. In this case, I chose the SPX. And I normalize the data on a 0 to 100 scale, and I use it in combination with the Chande trend meter. So I have relative performance on the vertical axis and absolute performance on the horizontal axis, and I'll show you what it looks like in a second. But this is not Scooter. So I'll show you that there's similarities to Scooter, but it's not Scooter. So I want to be absolutely sure, because we are comparing directly to an index. Here, okay. Without further ado, if I can get this thing to work. Somehow my computer is frozen. Okay, all right. So this is what I wanted to show you. So suppose I take every single stock in the S&P 500 and I plotted it with the vertical axis being the Chande relative performance meter, the horizontal axis being the absolute trend meter. This is basically the answer to your question. So you see this kind of a scatter line from bottom left to upper right. Mm-hmm. So the stocks on the upper right are strongest. You can choose to trade ones which have the best relative performance. So you can say that I'm going to pick stocks that are between 90 and 100 on the relative performance scale, or you're going to say I'm going to trade the stocks to the best charts. So you can look at the ones that are, say, between the trend meters between 90 and 100 or 80 and 90, or you can say I'm going to be counter trend and buy the weakest stock. So it's up to you, but now you can see every stock and see how it's looking relative to everybody else. And here's what I've done for you to answer your question specifically. I've looked at the strongest relative performance stocks, and I put them on the vertical axis. So you see the vertical axis runs between 95 and 100. So these have the highest, strongest relative performance versus the S&P 500 index. And the horizontal axis is the trend meter. How does the chart look? And you can see that I have stocks like Amazon and Micron and Netflix and Red Hat, and then AbbVie and Boeing and CMA and Network and Intel and whatever, and Adobe. And this is not a matter of my opinion. This is simply how the numbers came out, right? So it's very objective. It is what the numbers tell me. And I don't have to look at an analyst and whatnot. So this is my answer to your question. If you have money, would you buy now? Yes. What would you buy? Here's some alternatives. Why would you want to buy it? Because they have very strong relative performance to the S&P, and they have good-looking charts. So that's one way to solve the problem. Another way to solve the problem is to say that I want to trade the best looking charts, and I'm not going to worry that much about the relative performance meter. So if you look at the vertical axis now, we've expanded the scale. It's gone from 60 to 100 rather than 95 to 100. But we've expanded, or we've shrunk the horizontal axis. The trend meter now only goes from 86 to 96. So very strong looking charts. And again, some of the culprits are still there. We've got Netflix there. We've got Micron there, Red Hat, Amazon, and so on. But it's a different group of stocks than if you sorted one way versus the other way. So I just want to so I just want to show you the chart for Micron. Micron has great absolute performance, or great looking chart, and great relative performance. And you can see that if you look at the chart, it's breaking out, and it's probably worth buying. So this is an example, but I found this by a totally mechanical process with no human intervention and whatever. So I just want to take a trip back and show you this chart again. So this is the answer to your question: what should I buy if I want to buy? The vertical axis is relative performance. The horizontal axis is absolute performance. And you can buy the strongest stocks with the best chart-looking charts and the best performance. Or you can say, maybe they're overbought. I'll buy something between 80 and 90 rather than above 90. So maybe it'll still rise and get to above 90 as it improves. So you can pick where you want to be. And if your chart is somewhere in the middle in the yellow zone, maybe you don't want to choose it. Or if you want to be counter trend, you can go all the way down to the bottom and say, hey, I'm going to buy the weaker stock. When this thing reverses, I'm going to make a tremendous percentage return on my investment. So it's up to you. But now I can put everything on one chart. I've got the relative performance. I've got absolute performance. You can look at the chart, looks good, blah, blah. And, you're good to go. So that's sort of my special tool for the day. And I think my answer to your question is you can pick where you want to be, which box you want to trade. And lo and behold, it'll tell you, which stocks are in the box. And then it's up to you to decide whether it meets any of your other criteria, allocation, et cetera, et cetera. Does that answer your point?
I will point out, too, you're showing Netflix as one of the strongest stocks.
Right.
And while, I know it's tough to chase a stock. I don't like to chase a stock after it makes a big move. But when you look at the S&P 500, when it bottomed back in, I think it was like February 8th or 9th, Netflix actually pulled back and tested its rising 20-day moving average at that point. It was clearly still a very solid relative performer, but it had pulled back at that point. So I think you raise a good point in that many of these stocks have run, and maybe if you're looking, to put money to work now, it might make sense. Maybe the second tier, maybe some of the ones that are first tier are there because they've made such a big run that they may be overbought.
Right. So for example, when you look at this thing, you can say, I'll buy, say, you might say if it's above 90 on either side, I'm not going to buy, maybe it's overbought. So, okay, You can buy something that between 80 and 90, So there's a box, 80 and 90 on the vertical axis, 80 and 90 on the horizontal axis. Maybe I'll buy in that box. Or you can say, maybe, I'll buy in the 70 box or the 80 box. So it's your comfort level and how you view the market. And what you have to remember is that the fact that Netflix has gone up or Micron has broken out means that the market believes it's going to go higher, and they don't really care about the prices. They're buying anyway. So the fact that it's overbought or some analyst doesn't like it somewhere, maybe it means something, maybe it doesn't. But the market is telling you it wants to go higher. So, But to answer your question, you can see the entire spread of the universe, and you can pick your box, and then that's your own sandbox, and you can have fun playing in it.
Yeah, I definitely would suggest that lower left-hand corner. You might want to stay away from those.
A matter of opinion. If you're an institutional buyer and you got $10 million coming in every day, that corner looks pretty good because you're buying value.
That's true. If you're a value investor, you're correct.
Anyway, so that's my answer to your question. And let me just go ahead and show you one more chart. This is a plot of scooter versus the relative performance meter. You can see it's all over the map. The R-square is only 0.15. So the two calculations are not the same. And lastly, you can do the same thing with scooter and the S&P 5, scooter and the trend meter. So you can plot all the stocks in the S&P 500 by scooter versus trend meter, and you get a similar looking plot. Again, you can pick your sandbox, decide, what particular thing you like. I personally would like to have something with very good absolute strength and very good relative strength, because then, kind of gives me protection on both sides. And then and then this is the ultimate challenge. Can you type 2 lines of code? So if you wanted to do a chart scan, the first line just tells you what group you want to focus on. And then you just enter rank by Chande trend meter, run the scan, and you'll basically get everything that's on this plot.
There you go. I had a lot of people asking, hey, can I get this chart? How do I make this chart? Everybody.
So easy enough. It's a 2-line code. I know it's challenging. We can type it and then run it, and you can plot it. And easy peasy, you can pick your sandbox and you're off and running.
Well, there you go. And I will include these charts in the Market Watchers Live blog recap. So if you want to take another look at these so you can come up with your own plots, I will have them there.
Right. And then, again, everybody has a different comfort level. So, you can choose, what makes the most sense to you.
Yeah. And then I had a couple questions coming in from the room.
Go ahead.
One of our viewers asked, why would you buy strong charts at their highs now when those stocks might lose strength? Why not select stocks in the 90 percentile instead?
My short answer for you is NVIDIA. Some stocks take on a life of their own. They get to the top because they're strong and they stay there for months and months and months. So why miss out on a trade? But on the other hand, I agree with you. Like say, okay, it's at 90 today. Well, I'll wait for a little pullback. Maybe it'll come back to the 10-day moving average or whatever. My view is if you find a great stock, just buy it. Does it really, 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 what matters is you're in the stock rather than you got the best entry point, because in the search for your best entry point, you might miss the trade altogether.
Yep. I always talk about the scooter anyway as being like a batting average. So you want the ones with the higher batting average, and those are the ones that are relatively strong. So the other one was,
sorry, go ahead.
If we're gonna be looking at a correction, I think they said you mentioned 17%. Was it at a 17%?
No, I didn't say anything of that sort.
Yeah. Okay. Because they were asking about the year ahead that you had mentioned 17%.
Oh, that's 17% up.
Okay.
Okay. So that it's green. So my year ahead forecast for the S&P 500 will be, 17% plus or minus 4. So it could be up, say, 13% to 21%. But let's say it's up double digits. So if you want to be conservative and you buy now, I'm expecting it's going to be higher a year from now, and maybe double digits higher a year from now.
Indeed. And I would recommend folks that if we didn't get to your question, that definitely check out Tushar's blog, because a lot of your questions are going to be answered in there. And I know you have charts in there that are already set up with the trend meter and that sort of thing. So you can go in and see how those are set up straight out of your blog.
Right. And then let's see. Okay. Well, this just shows the NASDAQ. It's going to make a new high, maybe tomorrow. Who knows? But it wants to go higher clearly. And then the other thing I want to show was the dollar, because we came back down and we found support and it's come up, but we have this big long-term blue downtrend line. So in my view, the dollar will not have reversed until it can successfully get past the blue line. Mm-hmm. And then this just to show you that bonds and rates are stabilizing. If rates are rising, dollar will rise. If rates are not rising, dollar will probably be flat to down. And you see that bonds are finding support over here. This is BND, which is like, the hugest fund this side of the Suez Canal. And it's basically finding support. So I think it's a good chance that it's going to bounce from here. But which means that the dollar doesn't have enough energy from rising rates to push it higher. And it's also stuck against this big downtrend line. Since to go back to the relative performance of the Russell versus the S&P, or the small cap versus the large caps. And then if I were to obstinately go back to my chart here, see the short-term guys, the small caps are really not doing that much, right? The growth guys have bounced a little bit, but the value and the blend are still flat, and they're flat. So, I think the models are not buying into Tom's theory. So we have to wait.
Mm-hmm.
There's a lot of people not buying into my theory. It's okay.
Sorry, Tom.
I apologize. I get that everywhere.
Yes, indeed.
Happens to the best of us.
Well, we are going to get into the 10 and 10 here in a couple minutes. And I thought maybe what we do at the end of that, Tushar, is if, once I go through the 10 stocks, maybe you can look at them. And based on some of your modeling, if you have any comments on any of those 10 stocks, I'd certainly love to hear it.
My only problem is that I don't know how to, I'll have to set up my stock charts on that. But otherwise, I can tell you what, I'll write a blog about it. How about that?
Okay, that's fine.
That way it gives me something to write about tomorrow, or over the weekend. So
yeah, I love that when people give us the ideas
yeah,
for a blog.
Yeah, exactly. Anyway, but my point is that a lot. Okay, the fundamental problem here is that what is your time frame, right? Are you trading like 1 day, 1 week, 1 month, 1 year, 1 decade? What is it? And that sort of alters how you perceive the chart, right? Because you might say, oh, it's a double top, but you might come back a year later and it's substantially higher, and the double top is just a little wiggle in the prices is not important in the long term. So I think it's very important to have perspective. And so I go back to the trend meter, which says I'm going to get a single number, and it combines lots of different ideas and chart patterns, whatever. How do you weight this thing, blah, blah. But I have a single number. And I don't know about you, but I'm better at focusing on one number than 10 numbers.
Yeah, analysis paralysis. Erin did that workshop a couple of weeks ago, or maybe it was last week.
Right. A part of the problem is that, here's the problem, right? Suppose you have 10 indicators and you got 1,000 stocks. How are you going to look at it tonight? And then you'd come back, do it tomorrow, and then next week. And how are you going to remember what it was 3 days ago or 10 days ago? Very, very impossible. So, and actually, psychologists have done studies where they found that human beings can only focus on 4 variables at a time. So if you go to variable 5, I'm overloaded.
Yeah, I can only deal with maybe 2 variables at a time.
No, they have done serious testing. They did all this, how do you make decisions for the benefit of the country, and whatever's coming out through the window, what are you going to do now? Well, we can only focus on 4 variables at a time, which is why something like the trend meter or the momentum meter makes sense, because you only have 2 numbers to worry about instead of like 10 charts and oh my God,
Agreed.
All right. Well, we're gonna jump into the 10 and 10. I thought maybe what you can do, and Tushar, you're going to hang around with us, right?
Yes,
so
I will.
The anatomy of a trade.
Yes. Oh my God, my glamorous trade. I'm waiting for it.
We're going to get to your glamorous trade in just probably about 15 minutes or so.
Excellent. Thank you, Tom.
Yeah, Erin, if you'd like to go ahead and show the RRG, are you prepared for that?
Actually, you know what? Before we do that, maybe we could share the poll as to what's going on and how it may or may not have affected people's thoughts about the possible double bottom.
Failure.
Yep. And there you go, currently. And if you haven't taken the poll, guys, just hit that poll tab and see what you get.
I'm down to
I'm actually in the camp of a double bottom as well. I'm just seeing a little bit too much mixed messages and weakness across the board for my indicators. I even wrote about it. I was telling my husband, I said, it's days like this that are very difficult because everything is telling me both sides of the story.
Right.
So it does get very difficult. But the fact that I'm getting mixed messages is telling me that I need to have some caution here.
And the poll says 52% no, which means that they're probably going to be wrong. The majority is always wrong. So we could still be right.
Yep. Oh, starting to pick up there on the yes side. I think we're making our argument. All right. Well,
Thank you.
I'm going to talk very quickly before we get to the 10 and 10 about ChartCon, which is coming up. It is an online conference. And Tushar, you're going to be there, right? You're giving us a...
Rumor has it.
Yes. Let's see. Where are you? Oh, you get to follow me. That'll be great. I have to follow Tom McClellan, which is really going to be difficult, but
I think
it should be fun.
I'm going to have to bulk up here and start running a few laps every day just to survive after you, Erin.
We'll see. So anyway, if you want to register, currently we are running the early bird prices for the online conference, and you can just come in here and register. The one nice thing is that because it is online, you get to have that whole conference in live stream for you to go back and look at it. So you're not just buying it to be there, on that day to watch it live. You don't even have to be there to watch it live. You're going to get the entire recording. You get to keep it and go back to it. And I'm sure there are members out there that went 2 years ago and did it online, and they can tell you that they might still be looking back on what they got from ChartCon. And then, of course, if you want to join us in person and meet us all, we are offering VIP packages. Are you going to be going on the cruise, Tushar?
Yes. I was able to get a lot of things to work out and fall in place. So I'm on board.
Ah, excellent. So if you really want to make it fun.
That was another fun. He's on board.
Oh, no, I totally missed that. I'm sorry. All right. So anyway, I would highly recommend you check it out. And like I said, if you want to join us, there are VIP packages available. And as I was talking about yesterday, we don't hide. So we're not like in our hotel room the whole time when we're not presenting. We're out and about. So there will be plenty of time for us to socialize and, talk shop, which I absolutely adore doing. And it's no better place to do it than at SharkCon. So with that, let's go ahead and move into today's 10 and 10. And here we go. These were all of the ones requested. I do like now with our new chat system, if you want to like one that was interesting to you that somebody requested, you can do that. And then I can sort it and find out which ones are the most popular to go up. So feel free to use those like buttons and of course put your own symbol requests in. But this is what we had showing up, and I'm going to show you the RRG just quickly. And I'm going to take it to the daily since we're really looking at the short term here. Everything's really moving, relative to the S&P. We're pretty much online, very close to the center there. So what I would note is, again, we like to see these blue ones that are improving because those are, picking up some more momentum, but also looking at the outliers that are performing in the leading category better than the S&P near the center. So I'm looking at popularity of requests, and then I'm also going to be looking at their fit on the RRG as well as what industry they're in. I like to mix it up. So with that, Tom, go ahead and let's do it. Verizon, VZ is your first one.
All right, I'll bring this up, try and get through these pretty quickly. VZ, you can see I already had annotated. A couple of things on this one. Number one, I don't like this test of the declining 20-day moving average and continuing move down. I did put in the support line. We've had a couple of lows, intraday lows over the past few weeks, down about 47.5. If we do go back down and put in a new low, I think it's important that we are starting to see some strength in the PPO. So if we go back down on light volume, get some sort of reversing candle, I think we'll have a positive divergence in play. So Verizon could be getting very interesting from a long perspective, but I think I'm going to watch it for now. I circled these 7 candles here because to me, they really are pretty bearish looking. Here, you can see these first 3, the volume picked up across the board, and we closed almost on the low all 3 days. So to me, that's a pretty good sign of distribution. Notice on both of the moves to the upside, there were gap ups from the prior low, and that these bodies are pretty small relative to what we saw going down. And then right on the heels of this, 2 more big red candles with heavy volume. So I think there's a lot of distribution taking place. I'd either have to see a positive divergence develop down around 47, 47.5 with a reversing candle, or I'd have to see really good volume come in on move back through the 20-day. Right now, I'd just be holding.
All right. Let's see, the next one I have for you, and this was actually the most popular requested stock, which was Micron, MU. And I know we looked at it briefly with Tushar, but what do you got?
Well, it's other than being overbought, I don't know how you can really argue against Micron. Micron's been a great performer. Again, you're looking at a market. The NASDAQ hasn't broken out. The S&P 500 is not even as close to breaking out. Of course, the Dow hasn't broken out. And yet Micron is breaking out, has broken out, and look at the volume that's come in on this move to the upside. I think we got a lot of consolidation, or excuse me, a lot of accumulation on Micron. And I think these pullbacks, we had one about a week ago down near this 20-day moving average. Now we've got price support at 50 and the 20-day coming up from underneath. At some point, Micron will pull back, get a little bit of, we'll see some profit taking. And at that point, that's when I would be looking to possibly jump in. I like Micron. I just think right now it's too overbought and too risky in the short term from a short-term perspective.
All right. One of the other ones was Snap.
All right, that one I own. I know it's coming back because I've been watching it, but it is near key rising 20-day moving average support, so I'm going to be watching for that. But let me pull it up here. All right, Snap. Couple of levels. Obviously, the most recent low is the one that's going to be the most important, in my opinion. I don't think we're going back down there, but you never know with the market. But that low right there, I think, is pretty important. You can see the prior gap up here. I think this is a zone where I would be in accumulation mode if I like Snap, because I can keep a fairly tight stop just below that recent low. My guess is that we're going to eventually make another run back up to about 2075 on Snap to challenge that recent high. Whether it comes off of a 20-day test now or whether we consolidate a bit further, That remains to be seen. But I like Snap. I think we're going to get another move back up to 2075 in time.
All right. Let's see. We have the regional banking ETF, Spider KRE.
Well, I love the banks. We're getting a breakout. PPO recently had the center line test. So the first thing I would do is just to simply point out that we had a lot of resistance. We were really struggling to close above 63.5. We did that. We've pulled back. I suspect that we're going to see probably maybe a trend line support test on a pullback, or maybe the rising 20-day, but I'm kind of looking at this right here. So to me, I would expect that between 61.5 and maybe 62.75, which is close to that 20-day moving average, that's an area that I would look for some pretty good support on a pullback. I think rates are going to go higher. I think the 10-year Treasury yield is just stalling temporarily. I do look for higher yields. The Fed's been kind of telling us that we're going to see more rate hikes down the road. So the banks are a great way to play rate hikes as we move forward. So I think the KRE is a buy, and especially on a pullback into that support zone that I talked about.
Okay. The next one that is popular as far as a request, IBM.
Yeah, IBM, haven't looked at it in a little while. I actually traded this one a couple of times, had great, great earnings reports back here in October. And then again, I think even in January, they had a good report, but the stock had, a lot of it was built in. So it gapped up, went down, put in that hammer. I do think that the bottom is in on IBM with that hammer and the pickup in volume. But what I would be looking for is simply range-bound trading right now on IBM. So there is your low down just below 148. Here is your high. I think that's the range that I would trade. So the closer it gets to support, I think your reward to risk really picks up. And the higher it gets up in this range, I'd probably consider selling, because at that point, your reward to risk starts to turn against you until we get this breakout. But this is, you know, we can go back almost into mid-October, and outside of this one little dip, we've been in this trading range now for several months. So this is the range I would continue to trade for now.
Okay. The next one is EMN, and that is Eastman Chemical. And let's see here. Someone mentioned about the seasonality, that you might want to take a look at that.
I wrote about EMN, Eastman Chemical, and I think I wrote about their seasonality within the last week or two.
All right, go do your homework then, whoever it was that requested that.
What's that?
They need to go do their homework and read your blog for that one.
Yeah, I mean, we can pull it up for a second.
Oh, yes, yes.
But let me, I think it was that this time of year was really strong. Yeah, here you can see February, March, and April, very strong for Eastman. 2.7% average return in February, 4.1 in March, 7.9 average in April. We're talking about going back 20 years. I mean, these are pretty significant averages. And when you see it going up about 3/4 of the time in terms of, you know, is it going to go up in February, March, or April? This gives you the percentage chance that these months go higher. And these are the average returns at the bottom. Those are pretty strong numbers for EMN. So if I go back and we pull EMN up, and I'm going to do it on that relative chart that I like to do. And let's say annotate this one. First of all, clearly it's been a great performer. The commodity chemical or chemical commodity index here pulling back, but for the most part hanging on to these prior lows. EMN relative to its peers, its industry group going straight up, relative to the S&P 500 going straight up, while its group overall relative to the S&P has been going down. So what you have is a stock that is very strong within its among its peers, among the S&P 500, and its industry group really isn't performing that well. So clearly you got one of the best stocks in the space. So I think what I would focus in on, let me go ahead and annotate this, is that number one, you have a very strong stock relative to the S&P 500. So if your goal and the purpose of your trading is to beat the S&P 500, this has clearly been one of those stocks to do it. We mentioned the historical pattern, the seasonal pattern, which I think is certainly important to talk about or to recognize. And then what I would be looking for here, we can see this breakout. And this is what I see a lot of times. You get a breakout, a false breakout, you go down and you hold on to that rising 20-day, and then you break out again. I think this one looks really good. And I would say as long as it holds on to the recent low here, maybe around 100 or just below 100, I'm feel pretty good about EMN. I think this one goes higher.
All right. This one looks really interesting to me on my chart. GLPI, Gaming and Leisure Properties. I like that double bottom, and the PMO is just now giving us a buy signal in oversold territory.
Yeah, I mean, looking at this, I mean, you can see that the industry group has been very weak. This broke down below a massive support area on this huge red candle on heavy volume. I'd have to see the breakout above the 20 before I would trust any of this.
Amen.
You know, my gut feeling is that it's going to turn back down, but I'm going to go back out now that we've seen that. Let me go back to the daily chart here and annotate from this. Yeah, I would just, I mean, you can see all the recent reaction highs and the tops that come across. I mean, from a closing or candle body basis, you could draw it there. Intraday, you could draw it there. And then you've got the 20-day. I just think there's a lot of overhead resistance here to try to negotiate. I personally don't like it. These aren't the kind of trades. I don't try to bottom fish and try and catch this bottom. Instead, I think what you have is a stock that's wildly underperforming the S&P 500, and you're in an industry group that is not performing well at all. So this isn't my style. So I would say until it can at least negotiate some of these resistance levels, I'd pass on it.
All right. Well, the 50 is below the 200, so I would have to agree with you on a lot of that. Tesaro, TSRO, rising PMO, breakout. I don't know.
Yeah, it looks to me like it's trying to break its downtrend. I also like that candle on very heavy volume. That's almost looks like maybe exhaustive selling coming off that low. So what I would be looking at here is maybe the recent highs, you know, connecting all of this down here. It's been clearly in a downtrend for quite some time. One little tip, by the way, is if you come over here in this line, you see how it highlights. If I click on it and then click Command, this is on a Mac, and then the left clicker, I can actually drag this line down, and you can see that we are in a channel to the downside. If you can connect the lows at the same angle that you can connect the highs, you basically have a channel that it was in for quite some time, in the last 4 or 5 months. And then we got this gap down hammer on very heavy volume. I think that's a sign of exhaustive selling. Volume has not been light on this move back up. I would be looking maybe on a pullback to that rising 20-day. We'll probably get that because there's probably a lot of non-believers in this stock right now. But I think a test of that 20-day would be a great reward to risk entry.
Okay. Let's see. Next one I'm going to give you is Galectin Therapeutics, GALT. Crazy breakout today.
Yeah, I think yesterday we saw the volume pick up here as it took out all these highs, and now we're making another big move. It looks to me like we're certainly going to try to test this $6, $6.10 area where we put a high in back in January. And off of this uptrend, which I'm going to highlight, from here to here, we got a really nice uptrend in play. And it certainly looks to me like this could be the top of potential cup and come down to this low. And then we're kind of making this our way back around. You can kind of see this formation of a potential cup, and getting back up into the 6 to 6.5 area would establish the right side of the cup. At that point, I would probably be a seller and allow it to pull back, maybe put in a handle, and that would be another re-entry possibility. But I like the pattern. I like the move up. I like this action over here, breaking out above these recent highs to establish what looks like the formation of the right side of the cup. And you always want to see volume picking up on that move, and we're certainly seeing that.
All right. And our last one, let's see. How about XLNX? And this is also in that semiconductor space. We had a lot of requests today in the semiconductor space.
Yeah, it's in a great space. You know, I'm going to do this last one on this relative chart as well, because I think it's underperforming its actual, the semis, because semis have actually broken out here. And you can see Xilinx has not yet made the breakout. And you can see that Xilinx relative, this is what I was talking about, relative to the semis, is moving lower. So if I was going to annotate this, I mean, I don't have a problem with this chart. I think it's a pretty decent chart. What I have a problem with is the fact that it is among the laggards in its space. So when you get a downtrend like that relative to its peers, it just tells me I may have a great group, but I may not have the best stock in that group. Now, if we make a breakout we could all of a sudden see some outperformance. So I think as long as it's struggling to hit that resistance level, I'd probably hold off. But if we get a breakout and you see volume coming in, we could start to see some outperformance. So it's kind of a mixed signal. I like the group it's in, so I'd be bullish the stock, but I think there are others much better. I think Micron that I showed you before is clearly a much better performer in that space.
All right. And that is 10 stocks in 10 minutes, sort of.
Yeah, probably 15.
Excuse me. All right. So with that, that concludes 10 and 10. And here are the symbols. I will have those up in the MarketWatchers Live recap. There's a chart list at the top of our blog, and you can get to that. And all of these symbols, as annotated by Tom, will be in there if you want to take a peek at those. And let's see, with that, let me take us over to, I know we have a market update, but let's see here. Got to get to my share screen. Before I do, I just wanted to show you guys very quickly, and I know before the market update. All right, I just wanted to show you the chat and how that works over here. This is where we have that now on our page. And what I would recommend you do is click on the little person and put in your information. And if you put your email address in here, if you have a question like today for Tushar that he didn't get to, I can forward those to him, but I need your email address in order to answer it. So again, in the chat, just go over here to the person, fill out your information and ask your question in the chat, and there you go. And you can see when we organize it by popular or recent, however you want to do it. But I just wanted to run that through real quickly so you could see, and as the poll is running, and go ahead and put that in. We'll look at that afterwards. But with that, let's go ahead and get into our market update. And I'm just going to go quickly here to the member page. Come over here to Candle Glance so you know how this all works. I am going to adjust this so we can see Canada. And I think I'm going to add, what should we add today? I'll just add TLT again. That's one of the ones I like to look at. All right, here we go. So what's been going on today? As you can see, we got a rise out of most of the markets. We started to pull back on the Dow and actually went into negative territory and remained there. We do see the S&P 500, though. It is in the positive now. But really, when you look at the S&P 500 and you look at the NASDAQ, we're consolidating across. And my thought is this going to be enough, or do we need more of a pullback correction? And I know we're talking about only a day here, but when I've looked at both the daily and these short-term ones, you know, we are seeing some consolidation here. So I'll have to see if that's going to be enough or if we need to go down and have that second double bottom. TSX is in positive territory, had a nice rise, but has been moving mostly sideways since then. The treasury yields are down right now and currently reading at 28.59. We have UUP, had a nice gap up, continued on higher, but we are starting to consolidate right around the intraday highs. Current reading 23.57. Commodities are lower. We can see that USO has been traveling lower most of the day. Formed a double bottom. Looks like we're getting ready to test that on the 10-minute bar chart. Also with gold right now reading at 125.33. Not a surprise to see it suffering just a little bit right now given the dollar's rise. And as we can see, the VIX is moving lower, currently looking at a reading of about 17. So I think seeing this VIX move down, people are starting to feel a little bit more comfortable. And honestly, as far as sentiment goes, that's not a good thing. TLT, we can see bonds had a nice morning, but are starting to pull back, have rounded off on the top. I'm going to look very quickly at our market summary, what sectors are continuing to do well, which industry groups are doing well, and of course, which are the laggards. Currently, utilities and consumer staples, these defensive areas as far as sectors, are the leaders right now. Financials, energy, these are all the laggards currently. And we can see with U.S. industry, disk drives, airlines, drugs, not a surprise, like we've seen the technology sector doing pretty well. And retailers, banks, and paper are the industries currently in the bottom and lagging. We have Hong Kong, Sweden leading right now. Hong Kong ETF up 1.5%. And as far as laggards go, Brazil's down just over 1%. And with that, I'm going to conclude our market update. And did you have anything to add, or should we just get right into that anatomy of a trade?
Now let's just jump right in if you're ready. Take it away.
I am ready. Let's get over here, and I'm going to go. So the first one I guess we'll look at, since I just happen to have it up here right now. We were talking about Etsy earlier, and I did trade it back and forth. So when I picked it back here, I think it was in November, late October, Monday setup that I had. And, you know, we got this really nice scoop, and I thought that was a good pickup area. And so I did. I picked it up right around $16 down in here. Didn't do much, consolidated a lot, but it was okay. You know, I never really hit that stop at 16. So I felt pretty comfortable. And we finally got that breakout. You know, the PMO was flat, as was price. But when we finally got that breakout and I saw the move on momentum, I was pretty excited. So we did see it move up. I reached that target. So I reset my stop very tight because I really wanted to lock in some of those profits. And I eventually ended up stopped out back here. And I think I'm trying to remember what I actually sold it for, but I think I got out at about 19.25, somewhere in there. Well, I revisited the trade when I got this really nice PMO bottom, and that scoop was looking really good. I happened to still have Etsy in my chart list from when it was in my portfolio, so it was brought to my attention back here. So I re-entered at about $19 here as it popped up above the 20 and 50, and then I hung on. My target was about 22. That's where I was looking, and we did hit it on an intraday high. I hung with it mainly because, you know, the PMO was still looking good. And actually, while we were doing the show a couple days ago, one of my viewers was like, "Hey, did you see Etsy?" And I was thinking, no, I didn't actually see Etsy, and I hope it's good news. And we got that really big, beautiful gap up. I went ahead and just sold right then and there. I could have hung out with it a little bit longer. You know, you could see that short-term ascending triangle, which is a bullish pattern, got the breakout on that. But you know what? I'm in it to win it. So I'm going to take my profit when I can take my profit. So that worked out quite well. That was one of my very happy trades. Currently, I'm actually in a really stinky trade, not this one, but I'll pass that one along to you, possibly, if I'm not too embarrassed to do so later. But that one is still, unfortunately, hanging over my head. But I went ahead and I picked this one up. I think I bought it. It might have been yesterday, if not the day before, Tuesday. Maybe it was Tuesday. This actually was one that was a 10 and 10 request. And this will a lot of times happen. I'll see something that looks good to me. I pulled this chart up, Tom. I remember giving it to you, and I'm like, I really like this chart. And you were like, yeah, I really like this chart too. So I was kind of like, all right, I'm getting confirmation that way, and I think it looks like a pretty good trade. So I got in at about 42.66. I was actually really happy because at the time, it was the day before. I think it had closed at like 42.95 or 96. And so I put in a limit order. I didn't want to really buy it unless it went back a little bit. And so my limit order was 42. I think I had it. I wasn't that far back, like 42.89. And I ended up getting it at 42.66 shortly after the open. So I was pretty excited about that. And currently, obviously, it's doing pretty well. Now, the issue I have a lot of times is how do I do this with no target? Because if you don't have overhead resistance, it sometimes makes this difficult. So what I'm currently doing, so I ended up with it moving really nicely, and so I'm adjusting my stop. I had my stop fairly low here at about $41. You know, to risk reward sort of thing. And once I got this pop, and now we're sitting at what, almost $44, $43.87 right now. At that point, I raised my stop. So I want to hopefully get into some more profit, but I'm going to stick it out. What I'm looking for is to evaluate it at about $45. I think we're pretty much set on that, and then I'll move then I'll start continuing to evaluate it. Since I don't have overhead resistance, I will pay more attention to the PMO. I generally don't pay that close of attention to it once I get in, mainly because I'm an intermediate term buyer and the PMO may have a bunch of sell and buy signals while I'm holding it. But since I don't have a target, I think my best bet at this point is to keep evaluating that PMO. And if I start to see some serious momentum loss with some fishy price action, then I'll go ahead and get rid of it. But I just recently read very quickly, we had Charlie Kirkpatrick on the show, and he recently sent me 2 of his books. Very nice man to do that. And one of the things he mentioned in the introduction, as far as trading goes, is that, let's face it, we all have really great ideas and ways to find our investments and pick them and buy. But the problem most of us have is an exit strategy. And you really have to go in with that exit strategy, because the only way you're going to get your profits and curb your losses is by having a good exit. And I think we all struggle with that. And I know a lot of you watch this show for that very reason. But the actual buy isn't nearly as important as thinking about the exit. So in this case, like I said, I don't have overhead resistance, but I'm going to watch these EMAs. I'm going to watch the PMO. I'll be watching volume and just seeing how it goes. But right now, I like this accumulation. So those were my 2. Tom, I'm going to pass it to you, or Tushar, I can bring up a chart for you. I don't know if you needed me to do that.
Yeah, if you don't mind just putting up Amazon, I'll tie it into the exit business that you just mentioned. Unfortunately, I'm not set up to do it. Or we do it over here.
Yeah. Is there a particular chart style you might like? Let's see.
Just a basic style with nothing on it, no volume, no nothing. John Murphy's is fine.
Yeah. Okay. That's come on, it's John Murphy. All right.
Can't go wrong.
There you go.
So this is a chart of Amazon, and it made the high at about 1,003 back in August, and it started dribbling down. So I was able to buy it very close to the second low, around a little above 911, because I was happy I got a low, and I was riding along. And then it went up to 1023 and came back down to retest the average, and then I had something else going on, so I thought maybe I'll cut back my position here and use it somewhere else. So I cut back my position, and the very next day it popped like 20% up there, and so I unfortunately I had only half the position, because I use a discretionary exit, a no to get out. But nonetheless, I was able to ride it all the way up, and then I had a trailing stop, so I got out on the sell. So it turned out to be a pretty nice trade. I was able to go say from close to the low to close to the high, but didn't quite carry the full position all the way up. So right. I think, I just want to echo your thing about having an exit strategy. And back when I was trading futures, I had a fully mechanical approach. So, I had very elaborate exit strategies. So I didn't have to think. I'd have multiple exit strategies, and every night I get a printout, and I'd put in my stop order for the day, and I was done. So if you can handle that being mechanical, then I think you have a significant advantage. The main problem here is that there's so many stocks that you have a portfolio problem in terms of how many positions you're going to have. So there's an allocation issue. But if you can have an exit strategy, yes, it definitely will help you a lot. So
yeah.
That's all I have to say, really.
Yeah. Well, that's where we make the money, right? Is when we actually sell it or, short it, however that works. But yeah, that's so important. And it really didn't hit me until I read that last night, believe it or not.
Back, if you look at my book, I have lots of strategies there. The main issue is that as a money manager, you always have to get really smooth equity curve, because that's what people judge you on. So then you really have to have really good exit strategies in order to lock in as much of your open trade equity as you can. So you can have very complex and elaborate exit strategies. And if you can be mechanical, that's ideal. And you can test a zillion different things that satisfy your curiosity.
Mm-hmm.
It always helps to trade Amazon, no doubt about it.
Right.
Well, they should have a Prime for stock owners, but they only have Prime for people who want to buy things from them.
There you go. All right. Well, I wanted to go through a couple of trades here. I'll try to go through these pretty quickly. The first one is Innoviva, INVA. This one and all these three trades are a little bit different. Each one of them is a little bit different. INVA is actually my smallest position, and I'm a little bit concerned about the industry group that it's in. That's why I like the stock, but the industry group has been struggling relative to the S&P, which you'll see in a minute. And so I actually made it a pretty small position. But here was the breakout. This was earnings related. When it pulled all the way back and tested the 20-day moving average, that was my entry. I actually had a second entry if it had gotten down to 15, which was the top of this gap, but it never got down there. So I'm carrying half a position at this point. I'm letting it go. If it gets back up 17, I think I have a sell order in at 1685 or 1690, up close to that level. That's what I'm looking for in terms of a target. To the downside, I'm okay if it gets back down to that 15 level. I'm going to probably hang on to this one for a little bit. I know earnings just recently came out, so I don't have to worry about earnings for a while. But the problem that I had, and you can see INVA is doing great relative to the pharmas, and that's its industry group. And it's doing fine versus the S&P 500, even though it's had this pullback. Actually, this pullback, in my opinion, was an opportunity. But here's the problem with this trade and the reason why I didn't want to commit, and I wanted to be a little safer. I love the stock, but it's in a group that is not performing well relative to the S&P 500. So it's always harder to make money. So as a result, I had a smaller position in this one. Second stock I had, and this one was requested, I saw in the 10 and 10, and we've talked about it a lot. But Quinn Street, I love the stock. I really want to see the group break out. I think it's in a bottoming formation. I've talked about the media agencies group, and it is in a possible bottoming head and shoulder formation. If we could get the media agencies back up through 590, I think that would be huge for this group. And if you take a look, Quinn Street, QNST, is a great relative performer to this particular group. It's also, even though it's been in a really bad group, it's a very strong performer relative to the S&P 500, although technically I probably should compare it to the Russell 2000, but it's even stronger relative to the Russell 2000. And this is giving me some heartache. Now, it could be that we are putting in that right shoulder, reverse right shoulder in the group, but this right here, the weakening of the sector against, or weakening of the industry group relative to the S&P 500 is going to keep me having a very tight stop, close below the 20-day moving average, and I'll be out of it. So my stop has been slowly rising. And then the last one I wanted to mention very quickly, open text. I think this one was also one that was asked. I'm going to be a little careful. Yesterday we had a tail that came up above resistance, and we went back down below it. But the volume is, well, a few days ago picked up on the bottom. I'm looking for an increasing volume breakout above 35.5, 35.60. Right now we're at 35.91. I'd love to see some volume coming in here. This is a little different than the last two trades. Here you can see it's in a group software that has been going straight up on an absolute basis, even though this stock has been going down relative to its peers. But down here you can see the software relative to the S&P 500. This is why this trade gives me a lot more confidence. It's actually one of my larger positions right now because I love the group that it's in. So I think that when it came back down, it printed this beautiful hammer at gap support. And here is where I got in on the 50-day test. And I think I even mentioned it on the show about a week ago when it hit that level. I think it's got a really decent shot to head back up toward the 38, 38.5 area because it is in a very strong part of the market. So we can look at it again at some point in the future, but I love what's going on with OTEX open text. And with that, it is time to wrap up. Here's your anatomy of a trade. Erin went over Etsy and ARKK. Of course, Tushar, our special guest today, spoke a little bit about his Amazon trade. And then I gave you three stocks, INVA, QNST, and OTEX as anatomy of a trade. Give you some idea how we approach the market when we're looking at hopefully making money. But I do want to say, Tushar, it's always great to have you on the show. Really appreciate you coming on here with us today.
Well, thank you very much, Tom and Erin, and thank you for all the listeners and all the people who voted.
Yeah.
And I really enjoyed being here today, and hopefully we can do it again soon. Thank you so much.
Yes, and guess what? The poll ended with an exact 50-50. I'm not kidding you.
Right.
That's funny. Well, it's always great having you, and we'll definitely have you back, Tushar.
Thank you so much, Tom. Have a great day.
All right, so guys, tomorrow is your workshop, Tom, establishing a strong earnings chart list. Everybody's always interested in that. So next week's going to be fun, but we're going to let you know more about that tomorrow.
Yeah, and actually some of the anatomy of trade I just went over. I mean, these are stocks coming right out of that chart list. So if you want to I tell you what, you're going to be a glutton for punishment if you want to put together this chart list. It takes a lot of homework, but this is how I prepare. I mean, this is probably the biggest time consumer for me is putting together my chart list. So I'll be going over that tomorrow, show you how I do it, and certainly hope you can join. If not, you can always check out the recording that's put up here at Stock Charts, where you can view for a day, and it's also at YouTube. You can go over to youtube.com and search for Stock Charts and scroll down Stock Charts page, and you'll find the videos of the Market Watchers live shows. So with that, let's close it up. I want to thank everybody for being with us today, especially a very special thank you to Tushar for joining us again today. We love having him on as a special guest. Please remember to complete the survey as you exit. We do like to get the feedback. At the bottom of your screen, how'd we do? There's a link. You can tell us what you think of Market Watchers Live, and also give us some good feedback on Tushar. I'm sure he would like to hear. Yeah, do that when you can. It'll only take a couple minutes. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll be back here on Friday. We'll do it all over again. Happy trading.